What's going on, guys? Welcome back to the channel. Hope you're doing well. Now, overnight, the crypto fear and greed index has fallen back to slight fear and at 29. Now, this is very interesting because we are hampered by the macro US-China relations in terms of the tariffs. And this war is actually looking uglier than most people anticipate, although I anticipate this will be resolved sooner rather than later. But this is a very different kind of trade war. And that's what the experts are saying. China's recently expanded US export restrictions on rare earths. That's what it's all about. Now, of course, this is a power play from the Xi government, and the Trump government don't really help themselves because they constantly flip-flop by tweeting, yes, we're going to get a deal. No, we're not going to get a deal. 150%, 200%, whatever the nonsense is. I do believe that in time, especially for the 30th meeting, although China came out and said Xi will not be meeting them, and then Trump said they're not going to meet them. It's all a mess at the moment. But once this trade deal is announced, I think the markets will generally head up and melt up. And of course, that puts us towards the end of the cycle for one last pump. So that's number one. Number two, we've seen gold-related stocks which are falling. For the second day, metals are off about 8% from high. And this, of course, on top of that, you got the US job market wobbling before the shutdown. What now? This is going to be quite critical. There was an announcement that Amazon came out with a 600,000 layoff for warehouse staff. Some would argue these may be illegal workers or whatever, but all to be replaced by robots. So this, the major layoffs are not really cooling down. Estimated economists are saying, of course, 220,000 or less in middle October, leaving them basically unchanged since the shutdown began. But that's going to be quite interesting. So CPI on Friday is going to be a major event. Now, on top of that, what we're seeing, of course, the market with a degree of a bounce, and of course, long versus short. Generally, the market was actually quite long before it started to dip back up. And now what we're seeing here is the price of Bitcoin sitting at 108. It was 107 a bit earlier, but 108 is where we find ourselves. And we did dip all the way to 106. So overall, if you look at that in relation to the wick, right, you could see from the wick low of 101, we are actually forming a bit of an uptrend, if you ask me. Now, of course, that's very clear on the chart. On the hourly, when you start to look at the bigger time frames, the RSIs really come into play. And we know the negative RSI for the weekly for Bitcoin still hasn't really got done yet. Now, in terms of the shorts that are coming on, you can see here $14 million long on Bitcoin, $15 million short about 20 minutes ago, right? So you are seeing still a market that is heavily regulated. But this is what I'm looking for. This is a pattern. I'm just trying to conflate. We've had three-touch trend here, although it is really not an uptrend, if you ask me, as such. But nevertheless, we came here, we bounced off here, and of course, we bounced off here again. Now, in the short term, my targets have always been very consistent with regards to Bitcoin. What we have here is something that we've seen throughout this whole entire cycle, right? We've seen this, and you can see this massive range here, right? So this is when, people are naturally scared because of the range. But I would say this range is, what we've seen with Bitcoin is consolidation, pump, consolidation, pump, consolidation, dip, and then we had a pump. And now, of course, this is what I'm looking for. Well, I'm not going to be too greedy this cycle because I do believe ultimately this cycle will end sooner rather than later, and we may get into a new cycle based on price movements. So I'm not really countering too much on that. But shorts, shorts are piling in, although you're seeing this is a constantly changing picture. And I do monitor the hyperliquid whales in particular, because the hyperliquid whales are super interesting in terms of what the market direction is. You know, these guys are scalping with big positions, opening shorts and longs. And of course, occasionally I do catch the big trade by the Trump insider as to where the market is heading. Now, this week I did say to the group that Fed Waller was going to talk, and this is super bullish.
Good morning. All right. All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that have come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion.
That is bullish. That's absolutely incredibly. I mean, we're talking about, Fed Waller. Christopher Waller is a replacement candidate potentially for Jay Powell. So I guess what I'm saying to you is crypto overall is bullish. Quality projects should be hunted. You should be able to have at least one project that has a spot ETF, whether it's Bitcoin, Ethereum, Solana, Near Protocol, Bittensor, Tau, you name it. There's about 155 assets with a spot ETF. So you should be able to have a project or projects that are pretty much touted for ETFs. But what we're seeing here with Waller is unprecedented. And I think once this headline leaves, once they get this trade deal sorted, China has been very rough on us, he said, on slapping this. So this is just a crazy brinksmanship, right? Don't forget, the value of the dollar has been coming out. But I'm telling you now, you have the next candidate, Fed Waller, who is incredibly bullish. I mean, again, he basically talks about this. Check this out.
About payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago.
Something that would have been unimaginable a few years ago. And this is directly on the Fed's website. So guys, look, overall, short term, I've already given out a plan for the next 90 days of what's to happen, what I expect to happen. That's in the VIP. Go check it out. Join us. Check our links. Definitely worthwhile looking at what we talk about in terms of the long term. But what we're seeing here is, Aptos with a pump here. What we really see is the beginning of the acceptance of crypto as a globally accepted asset. And I think that is going to be very, very, very critical for everybody involved, right? So don't look at the day-to-day candles, short term, whatever. I would say stop playing with the meme coins, get some decent positions in play. Of course, hold long-term conviction. Your wealth is your conviction at the end of the day. It's not an easy market. Everybody knows that. But I do hope everybody can take something away from this, that the space has never been more bullish long-term. Whether we ride that or not, it's going to be a personal case by case anyway, guys. So smash a like, share the video, and I'll probably do another video. Friday's going to be big day for CPI. So look out for that. Take care, guys.